Hello, my dear friends. Welcome to the show, Jack Chow on East West Show with G&E TV. Yes, if you keep a good calendar on the big events that happening between China and the United States, you will find lots of things moving on positively. Especially at the moment we celebrate the 42nd anniversary of the U.S.-China relationship established in 1972. You will recall from that point on, right after the Cold War to what we are today, we see substantial move very fast, and we see times changing, right? So, of course, it is always a talk from the political point of view about how we should maintain and develop the U.S.-China relationship. Yet, from the other end, though, when business is concerned, when money is concerned, when people are concerned, so you can't stop the flow going back and forth. People tend to get together, so that's the trend. So indication is that as short as about 2 weeks ago, the two governments has announced the mutual visa exchange over tourism and the business visit.
And the business.
Right. So to retake the value of the issue, I have invited my good friend, Dr. Gu Lingyun, to come to the show to share his part from his involvement of putting dollars together to talk about how we see the U.S.-China relationship. Mm-hmm. Right? And we'll start that with your last trip to China.
Yes.
All right, good.
Over the past year, I have been traveling between U.S. and China for really long time and for many times. I always joke around with my friends. Like say, if you want to do something with United Airlines, let me know. No matter it's a good thing or bad thing. For good thing, I can always offer you good advantage. For example, come with me together to enjoy the VIP room. Or even for bad thing, I can just on behalf of you guys to make a complaint. And I'm pretty sure the CEO will know my voice because I travel too much.
You fly what airline?
United Airlines.
United.
That's right.
Okay, very good.
Yeah.
Do you fly Air China?
Air China, well, because they are partners from the Star Airlines. So sometimes even I make the purchase through the United website, but sometimes indeed I fly with Air China. Okay, the same thing.
All right. You fly quite a lot.
Yes, very much. Pretty much at least once a month.
I see. Once a month?
Yes,
okay.
at least.
So mainly to China?
Mainly to China and the rest of Europe, and sometimes a little bit east west coast domestic traveling as well.
Take China, for example. What do you do?
Well,
each of the visit?
Yeah, I'm in finance industry, and I'm also an investor. So there are a lot of business going on between China and the U.S. And sometimes we say, because at least several years ago, there is a very good mode we called copy to China, it's C2C. And so a lot of very successful business model rooted in US, and they has been successfully transformed to China and with its unique business model. And so there are a lot of this new business, new startups, and they are very successful, but at the very beginning they need money, and they need money from domestic, from China, and they also need money from the US VC communities. And I'm part of these communities, so I also know these two countries very well. That's the reason I go back and forth many times, try to identify those good companies and put money, inject wealth into these companies to help them to grow.
In other words, you bring US money to China business.
That's right.
Yeah. On the contrary. So instead of bringing Chinese money to the United States.
This, over the past several years, I do see the trend actually currently keep a very good balancing point. And sometime 30 years ago, you only see the US money flow into China, and later on with the growth of China, and you see a lot of Chinese money and pull into US market, specifically in the real estate market. And people blame for Chinese people, they bring so much money to boost the price of the US housing market. Even I don't believe that's the theory, but some people blame for this. But now you can see, because because China is growing to the number 2 position in the world, and the US still keeps the number 1 position. And these two actually right now are more and more balanced. It's not only just the one-way flowing of the capital.
I see. So in other words, there used to be one-way flow from US to China.
Used to be.
And later it kind of came to a point like they balance somewhere somehow.
That's right.
And then you are still representing the US to China flow.
Yeah, that's right.
In what form?
Well, because like for venture capital, sometimes like we have two very key terms, and we call the partner, and we call the limited partner. Right. Sometimes we say general partner. Partner, general partner, there are two different levels.
I see.
And those are the partner, are the peoples, and they get money from a third party and help third party to manage this money. And so we call the AUM, asset under management. And on the other side, we call the limited partners. Limited partners, they are institutions, they are high net worth individuals, and they have money, and they need the money to grow by themselves. But how to do it? And they give the money to us, and we help them to manage this money. But how do we make this money grow? And we need to put this money into the right place.
I see.
So there will be two different ways. One way is like what we are doing, venture capital. And we invest the money into those good and with very promising future startups. And we hope like Facebook, Google, and at the very beginning, we put maybe $10 million, but maybe several years later, we can get $1 billion or $10 billion back with like 100 times growth. That's VC. And at the same time, like people also do a hedge fund. So they also manage those very wealthy people's money, hedge fund, and they do trading. So, but the trading is for the secondary market. One, like you already see, those are public traded shares, and those hedge funds try to trade those shares. But for VC, we are at the first market. So like we are not at the secondary market, and we try to push those startups to IPO, and that's like two different ways.
I see.
Yeah.
Okay. What kind of money you're talking about? From what industry to the basket of who?
Okay.
What industry?
That's a very
I want to see
interesting
a
question.
trend.
Yeah, actually the money and we collect from, we call this, I explained this LP limited partner. It's across the entire nationwide. It's not only from a specific industry. So for example, we get the Indo money from Carnegie Mellon University, where I got my PhD from. So that's definitely from education, because like CMU also needs the money and donated from alumni, and they try to invest this money into the right place to see the good growth. So that's like a part of the money we get from CMU. And we also get from pension funds. And we also get money from, like I mentioned, but of course I cannot name their names, those ultra wealthy people. So it's just not only from one industry, it's pretty much cross entire nationwide. But the interesting thing is we do not invest money to every single sector. And we actually put a lot of emphasis into TMT, as we explained last time, and we call this telecommunication, media, and the technologies. But of course, that's an older term invented probably like beginning of 1990s. But currently, so many people still use this old-fashioned term, TMT, to cover almost every single new thing, like the internet, finance. We talk about the video game. We talk about online education. We talk about the P2P.
That's where the money goes.
Yes, that's where money goes. Exactly.
I see.
So all those new things, and we put money into them.
When you say collect money, though, what do you collect with? You issue bonds or what?
Oh, good question. No, issue bond is one way for enterprise, large enterprise, and they try to raise money from the public. So usually they do two things, right? If they do IPO and they just sell their shares to those people who want to buy shares for exchange of the money.
What is
into
IPO?
IPO is initial public offering. That means for those company and before they are private, but they want their shares to be traded, for example, in US, in NYSE or in NASDAQ. And that's what we call IPO, initial public offering. But the same time, like you mentioned, like issue bond, that's for big company. And they said, no, I don't want to sell my shares, but I do want to pay the interest. So in that case, they said, I'm going to issue bond So for example, I'm going to issue a 10 million bond, and I guarantee you over the next 5 years, each year, your return would be 10% or maybe only 4% based on the credit rating of that specific company.
Is it a verbal guarantee or you have collaterals?
It's not the verbal guarantee, but it's also not a collateral. We have something we call the term sheet or TS, or we also have contractor. And so those money we invest into those companies, that's purely just kind of, you can think about, that's the non-collateral money invested in just for exchange of the early shares. So for example, Mr. Zhao, like you have a company and you said, now I need to raise money. I want to raise $5 million. I only want to give 20% of my company. And as a venture capitalist, I looked at your business model. I talked to you. I talked to your team members. I say, good, that's a fantastic business model. I want to do it. So I wire transfer $5 million into your company's bank account, and we sign a contract. And starting from that day, I own 20% of your company. And so because I pull like 5 million into your company, and I get 20%. So you can think about this company currently is $25 million, and I hope you and your team can grow the company to like 100 million or something. And given that said, my investment will get 4 times return. So that's what we do. But there's no collateral.
What if the expectation turns out to be a failure?
Oh, that's really a bad story, of course.
For example, how do you want to promise your investors from whom you collect money to make sure he wins or she wins? Right? And what if there's a disaster? Okay? When there is no guarantee of something, I want to hold down your house or what something. So what will happen to the money and the people?
You definitely ask a very good question, because in venture capital community, and there are 2 things very important. Number 1 is we call it the historical track record, and then number 2, and we called the industry. So number 1 is, of course, for people or for company, if they do not have track record at all, and they want to say, please give your money and let me manage this money for you. People don't trust you, right? And they want to see over the past 10 years or 20 or even 30 years, how many companies you invested before, and what type of investment return you got. But fortunately for my company, IDG and Excel Capital Partners, we have been in this industry for more than 20 years, and we invested a lot of very big and successful companies. For example, Tencent, Tengxun, for example, Baidu, or like a Ctrip, we called in China, we called Xiecheng. So there are so many of those big companies and successfully IPO'd. We actually invest money at the very early stage. So we have very good track record. And then number 2, we also only put money into TMT and those very fantastic and promising industry.
All right, let's take a very short moment out. When we come back, we'll find out what kind of business development we're talking about, especially in a term when, in the form of bringing US dollar to the Chinese market, what does it do with the money? So stay with us, please.